Hey guys, we are back once again. Welcome back to the channel. We have Mason Greenblatt right here.
Hey guys.
Robert Greenblatt right here. That would be Little Bear. This would be Papa Bear. Mason and I are jumping on here real quick to just tell you, don't get pre-approved for a mortgage. Let's go shopping for a house and don't get pre-approved. What? Does that make any sense? I don't know. Well, Mason and I were talking about some reasons why, or what could happen if you don't get pre-approved for a mortgage and you do some shopping. Mason, what's a good thing or a thing that we should share with everybody who's watching this video?
Mortgage payment shock.
Boom. Right. So what could happen? What could happen if you're looking at homes, you fall in love with a home, and then you go to get pre-approved for a mortgage?
To find out that you're expecting the mortgage payment to be, X dollar, and it's a lot higher than what you're anticipating. That could be it right there. If you're expecting a $1,500 payment and it's a $3,500 payment,
Yeah, that's pretty extreme, right? So there are online mortgage calculators which can help, which you as a consumer may or may not be looking at. We suggest looking at it, of course, but that payment shock is a big one for people. Big. Now, the example you just gave us, Mason, that's extreme, $1,500 versus $3,500, but not crazy. What if you're just used to paying $1,500 a month rent for your one-bedroom apartment? And then you go to shop for a house because your income is good and you've been making more income, and now it's time to go buy a home. And the mortgage company says you can afford it, but
you don't want to pay it.
But you don't want to pay it, right?
Yeah.
I mean, that's okay, right? Because that does happen. So that's one example. Something like that could happen where you are actually approved for way more than you want to spend.
Yeah.
And so payment shock is definitely something that could happen if you choose not to look into the financial elements of a pre-approval before we go shopping. What else could happen?
We could get approved for a lesser amount.
That's the
shopping at a $500,000 price range, and we only get approved for $400,000. Depending on what the situation is.
So, right. Thank you, Mason. Imagine this, guys, right? We look at a house today for, did you say 400,000?
500.
500,000. We look at a $500,000 house today and you fall in love with it. We scramble, we connect you with one of our lenders, you get pre-approved, and the lender says you're good to go at 400,000.
Yep.
Now, number one, the $500,000 house isn't going to sell for 400,000. That's kind of like winning the lottery. So chances of that happening are really rare, right?
Yeah.
The other thing that's going to happen is now we go look at $400,000 houses or a little bit less, and you don't like them because you already kind of tasted the $500,000 house. And then all the homes after that could potentially be a disappointment until you change your expectations.
Yep. Yeah.
Yeah. That really messes with your brain. So all the more reason, again, to have those conversations with a lender ahead of time. That way you're very focused when we're looking at homes and we know what you're comfortable with. What else?
Losing a home due to not being pre-approved, which is more than likely possible even in this market.
Yeah. Right. So what does that mean, guys? So as we record this, it is still a very competitive market here in our service area, as is many areas of the country. But even if it's a balanced market, if we rewind the clock, at any moment, at any time, someone could come along and make an offer on the house that you just fell in love with because they could have fallen in love with it yesterday and you saw it today. So getting pre-approved is not necessarily a difficult process. And there is, by the way, there's an upcoming video, pre-qualification, right, versus pre-approval. Mason, are those different?
Very different.
Yeah, very different. So stay tuned. Video coming about the differences there. That's super important, guys. So getting that pre-approval, ideally, which carries more weight than a pre-qualification. That's a little teaser for you. That could take a couple of days, right? Sometimes could take a little bit longer. The pre-qualification is a little faster. But in the meantime, if there's a delay, then what happens? We saw the house today. You fell in love with it. Someone saw it yesterday and also fell in love with it. Their offer could get accepted before yours.
Might take a few days just to get pre-approved or find the right lender, or just that.
Yeah.
Take a couple days.
Yeah. Sometimes there are surprises on credit as well. Like, we didn't even talk about that, right? Sometimes somebody has a credit run and there's something on there you didn't even know about. That happens. Yeah, that happens. It happens. It's like, oh, wait, I paid that. I had one happen where a car was paid off a year and a half earlier, but it was never reported by the financial institution. Do you think that kind of messed things up for a while for that particular buyer?
Of course.
You bet it. Yeah, you bet it did. And we had to jump through hoops to get that figured out. And our jobs as real estate professionals trying to help you buy a home is to try to keep that road as smooth as possible, right? Yep. We know that there are going to be some speed bumps along the way. Every real estate transaction has some twists and turns, and we always say buckle your seatbelt. There can always be some stuff going on. Yeah. So we're going to try to eliminate all that stuff proactively. Yeah. So we had 3 things, guys. Reasons not to get pre-approved, which obviously we're kidding. We had, what did we have, Mason?
We had mortgage payment shock.
Mortgage payment shock. To me, that's like a huge one, right? Mortgage payment shock. Number 1. Number 2.
Number 2, being approved for a lesser amount.
Yep. What if you get approved for less than you are shopping for? That's like the broken heart syndrome of shopping for homes. 3.
Losing the home due to not being pre-approved for a home loan.
That's also kind of a broken heart. So I would say number 2 is more disappointment. Number 3 is a broken heart because you just fell in love with a house that you couldn't actually afford, right? It's in your comfort range and the mortgage company said it's okay. And then the house kind of gets sold while you're getting approved. Yeah. And I guess the next question people would ask us is, well, I'll just make the offer as soon as I see it. And that's great. But in reality, if we don't have a qualification or pre-approval when we submit an offer for you, it's extremely unlikely a seller will take it with any seriousness.
Yeah.
Because they don't know you. You may be the nicest person in the world, and we probably think you are, but they don't know you. And exactly. To a seller, it's numbers on a page. That's all it is. Yeah. Got it. What do you think, Mason? Is that a wrap?
That's a wrap.
All right. Mason Greenblatt, once again, thank you for joining us.
Thank you.
All right, guys. We will be back again soon. We teased about a couple of other forthcoming topics. Please take a moment, help us grow our channel. Like this video, subscribe to our channel, and we promise we will keep bringing you interesting real estate content. See you soon.
See you guys.